This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The European Commission is working to speed up the availability of alternative energy supplies to try to cut the cost of banning Russian oil and persuade Germany and other reluctant EU nations to accept the measure, an EU source told Reuters. Some EU countries are also pushing for other new restrictions nearly 8 weeks after Russia began its invasion of Ukraine. These include excluding Russia's top lenders Sberbank SBER, and Gazpromneft from the SWIFT banking system, halting imports of nuclear fuel from Russia, banning more Russian news channels, suspending visas for Russians, and blacklisting additional individuals and companies linked to the Kremlin, diplomats said.
Oil prices rebounded on Wednesday as a drop in U.S. oil inventories and concerns over tighter supplies from Russia and Libya drove a recovery from the previous session's sharp losses. Brent crude futures rose 65 cents, or 0.6%, to $107.90 a barrel by 13:11 GMT. The front-month WTI crude futures contract, which expires on Wednesday, rose $1.06, or 1%, to $103.62 while the second-month contract gained 77 cents to $102.82. The two main benchmarks had fallen by 5.2% in volatile trading on Tuesday after the International Monetary Fund, IMF, cut its global growth forecast by almost a full percentage point, citing the economic impact of Russia's war in Ukraine and warning that inflation had become a clear and present danger for many countries.
Moving on to the top news in the energy sector.
The world needs to find $1.3 trillion of incremental investment by 2030 to boost all types of energy output and infrastructure from renewables to oil and gas to avoid an energy crunch, U.S. bank J.P. Morgan said in its first annual energy outlook. Our main finding is that by 2030, energy demand growth will exceed supply growth by circa 20% based on current trends, primarily driven by emerging economies and their efforts to develop and lift their citizens out of poverty, strategists Marko Kolanovic and Christian Malek said. Investment will need to be inclusive of all fuels, including oil and gas, renewables and nuclear, with oil demand alone expected to grow by around 10% by 2030 and gas by 18%.
9 tankers carrying Russian-origin crude and fuel oil have discharged in the United States in April, likely the last ones to deliver before a wind-down set by Washington expires this week, customs and tanker tracking data showed. The United States last month set an April 22 ban on imports of Russian crude and refined products. The United States gave importers of Russian petroleum, liquefied natural gas and coal 45 days to take en route and under contract cargoes. Tanker Sea Magic, which loaded fuel oil at Russia's Taman port, discharged at Valero Energy's St. Charles, Louisiana, refinery last week, the last of the 9 tracked to discharge. The data does not include ship-to-ship transfers or Russian origin oil loaded elsewhere.
Next, we have the top news in metal markets.
Gold edged higher on Wednesday, supported by a retreat in the dollar as well as worries over inflation and slowing economic growth due to the Ukraine war, while looming U.S. interest rate hikes capped gains. Spot gold rose 0.2% to $1,952.70 per ounce by 11:10 a.m. Eastern Time, 15:10 GMT. Prices earlier hit $1,938.65, a trough since April 8. U.S. gold futures fell 0.3% to $1,953.80. We're getting closer to a buying opportunity in gold. We had a nice little corrective sell-off and there is an opportunity here to move higher, said Daniel Pavilonis, senior market strategist at RJO Futures.
Industrial metals prices fell on Wednesday as further lockdowns in top metals consumer China were seen potentially sullying demand, while inventories of copper climbed. Benchmark 3-month copper sank 0.6% to $10,245 per ton in official trading activity, while zinc shed 1.2% to $4,445 a ton. Demand concerns in base metals have been driven by China's COVID-0 approach as well as the realization that rising costs has to have a growth impact, said Alistair Munro at brokerage Morex. We will now look at the top news in the agricultural sector. Indian wheat could offer a cheaper option for top importer Egypt but will have to overcome quality controls set by the country's agriculture ministry as well as higher freight costs. Last week, Egypt's agriculture ministry announced it had approved India as a wheat import origin but has placed several conditions including inspection for pests prior to export and the use of only a specific pesticide, according to a ministry document seen by Reuters. Just because we approved the origin doesn't mean we accept anything. There are technical conditions set by the Plant Quarantine Department, Ahmed El Attar, the department's head, told Reuters.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.